and welcome to another episode of Financial Minds Meet the Experts. I'm your host, Jaime Agostino. As you know, on this podcast, we're joined by financial industry experts to talk about topics, trends, and themes that credit union professionals need to know about. This week, I'm joined by Justin Conrey, President CEO of CU Business Group. Did I say the last name right, Justin?
Yes.
Okay.
Yeah, Conrey,
I don't know why I
whatever you want to
was
say.
nervous there for a moment.
It's fine. Yeah, it's Conrey.
Conrey. All right. Well,
Yeah.
Justin, welcome. Thank you so much for being here.
No problem. Thank you so much for having me. I appreciate the invite and the opportunity to talk to you today. It's great to see you again. We just saw each other not too long ago, so thank you so much.
Oh, you're welcome. So, Justin, for those that may not know you, would you mind telling us just a little bit about yourself?
Sure. So I've been in the commercial lending industry for, it seems, almost 20 years now, which I started in the credit union space, which is my natural home, which I am back in today. I did deviate to the dark side for a while. I was in community banking for a little bit, but came back home to the credit union space. So I started at a credit union in Austin, Texas, which is my hometown, University Federal Credit Union there, managed the commercial lending department for a while, went on to an opportunity at a community bank and was a chief credit officer in the community banking space for several years and wanted to get back into the credit union space and had been a client previously of CUBG, and an opportunity came up to join CUBG 7 years ago. And I was elated to have that opportunity. So I moved up to the Pacific Northwest, which is where I am today, and joined CUBG 7 years ago, and now President CEO of CUBG. And we've been around for 20 plus years, helping credit unions in the commercial space. And being back in the credit union industry is where I want to be and where I wanted to be long term. So this opportunity just worked out perfectly.
All right. Well, wonderful, and welcome back. So
thank you.
So tell us, who is CUBG and what problem are you solving for credit unions?
Yeah, so we are a credit union service organization. So we are a CUSO. We are owned by corporate credit unions, Viso being one of our corporate owners. We serve credit unions in any capacity related to commercial or member business lending. So we can help with any aspect of the commercial lending process from start to finish, anywhere from origination to underwriting to ongoing annual reviews to loan portfolio monitoring to participations to closing docs to servicing, and in the unfortunate situation, liquidation and collections. So literally any piece of the puzzle that you need, we are able to help you, and we don't have to do it all. We can do bits and pieces of it, and we can serve credit unions in any capacity, no matter where they are in their journey into commercial lending. So if they're just getting started, we can do everything. As they grow, we can grow with them, and we're sort of built to allow credit unions to outgrow us. Our initiative is to make credit unions successful in that space, and as they become more successful, they can hire more individuals, purchase additional technology, and the reliance on us becomes less. But we're also always a backstop for credit unions, both small and large. We work with about 675 credit unions now in 48 states, and we serve them in various capacities. Some we help start their program. They've long outgrown us, but they'll come to us if they happen to be short on staffing. They lose some underwriters. They need underwriting for 30 or 60 days. They can plug in and plug out. We also do a lot of consulting services. So we do annual policy updates. So a lot of credit unions in the industry use our policy template and customize it individually to suit their risk profiles and their market. And we continually update that. We do third-party loan reviews on existing portfolios. And we continue to serve credit unions with different products. So about 2 years ago, we got into SBA lending. So now we have sort of a turnkey SBA lending program to allow credit unions to do more small business lending. Historically, credit unions have gravitated towards commercial real estate, but there's a need for credit unions to get into the small business lending space today. So we help serve them there. So we really, anything that you can think of in the commercial lending realm for both conventional and SBA, we can be a resource for anything and everything. Whatever the credit union needs, we're here for them.
So Justin, for credit unions that are interested in starting business services and lending, where should they start? What is their step one?
So that's really why we were founded, right? We were created out of a corporate credit union to help credit unions get into the commercial space. So historically, credit unions haven't been doing commercial lending near as long as our community bank and large bank counterparts. But credit unions, when they take that first step, they realize commercial lending is something they want to get into. They want to serve that set of their membership. I think what they need to do first is just figure out what type of lending they want to do. I think there's different avenues. Most credit unions historically have gone the commercial real estate route because it's easier to do more with less. And what I mean by that is it's easier to do larger loans with less resources on commercial real estate than it is to do small business loans. It sounds kind of counterintuitive. You would think a small loan would not require as many resources as a larger one, but in the commercial space, it's a little bit different. Just define what it is that you want to do. If you want to go, if the idea and the goal is to grow a large portfolio, grow it quickly and generate a large return with that investment, commercial real estate might be the way to go. If the idea is to go be a strong community-based lender, like a lot of credit unions like to do, serve a certain subset of that market, then establish what it is that you want to do there and take that direction. So I think just first decide, where you want to be. You can do a little bit of both as well. And then really all you need to get started is you need a policy, you need some procedures, you need a business loan committee, you need to establish some framework within your credit union to be able to create a business lending department. But you don't need a ton of resources to do that. That's sort of where someone like us steps in. I mentioned earlier that we have a policy that a lot of credit unions use. So really call a CUSO, call someone like CUBG. We can help develop your policy. We can help develop your strategy. We can help develop your risk profile, what it is that you want to do and the risk tolerance that you want to have, and help direct you in how to build your staff and grow that over time and help direct you on what resources you need to start. But really, just to get started day one, it's, decide what it is that you want to be. You can't be everything to everybody. So really hone in on what it is that your strategic objective is going to be and what markets you want to serve. And then, either create your own policy based around that or find a resource out there that can help you get started. And naturally, credit unions will grow from there. You do a couple of transactions, they build on each other. The word gets out that your credit union is engaged in commercial lending. And if you give great member service to somebody, no matter if it's on the consumer side or the commercial lending side, that word of mouth is going to help your portfolio grow. So I think that's a real basic step. It doesn't sound overly complicated. And I'm a little bit biased. I think CBG does a great job of helping, but there are other CUSOs out there and there are other organizations that can help you get started. I think figure out what it is that you want to do and go all in.
All right, great. So how many staff members would a credit union need on staff for business services and business lending? And how does CUBG fit into their day-to-day operations?
So I think the most common answer on any question that you ask in commercial lending that I've learned over the years is you can ask any question, and the question is always, it depends. Again, back to what I was talking about a little bit earlier. I think it depends on what your strategy is, what type of lending that you want to concentrate in will determine the size of your staff. But it sounds crazy. You really need one person to get started. You just need one designated individual. They don't have to be extremely experienced in commercial lending, though it is helpful if they are. But really just designate an individual and partner with some other organization that can help fill that role. So there are regulatory requirements that the NCUA imposes on commercial lending that individuals have 2 years or more requisite experience in the type of lending that they're going to do. But you don't have to fill that with personnel in your credit union. You can fill that through third parties like a CUSO, so like CUBG. So we can help fill that gap. So again, you just need a person. I think historically credit unions that were getting started and used someone like CUBG were designating a business development officer or maybe a business lending manager first. They would outsource, a variety of services to someone like us and help grow their portfolio. And as their portfolio grows, they can hire additional staff and take some of those services in-house, all the way up until, there's some credit unions now that have, hundreds of millions of dollars in commercial loans that started out that way and are completely self-sufficient, but relied on a third party to get where they are. So I think that's perfectly okay. And I think that is the safest route, especially when it comes to making sure that you're regulatorily compliant with all of the things that you need to have in order to be successful in the commercial space. But really, designate one individual. I used to tell credit unions a good strategy would be to designate an individual, go out and purchase some participation loans. So participation loans are commercial loans that are originated by another institution. Credit unions will sell portions of their loan to other credit unions for the purpose of managing cap challenges that they might have. There's loan-to-one borrower limits that the regulators impose on credit unions. So you can only have so many outstanding commercial loans to a certain individual or common ownership in an enterprise. So a lot of credit unions that have repeat borrowers have to manage that cap, and participation is a good way to do that. So there's generally loans that are out there. A big part of what we do is broker and sell participations amongst credit unions, so match credit unions to participations. But I would say go maybe buy some participations, get some commercial loans on your books with almost little to no effort on your part. You can outsource the independent review of those participations to a third party. You can get the underwriting done. You can meet all the regulatory requirements for that. Build that up, start generating income. And I feel like once your department starts generating income, then you have a more solid foundation to be able to ask for additional resources from senior management and help grow that. So from day one, you can, once you have your policy established, once you have the framework established for your commercial loan department, you can put commercial loans on your books without originating and start generating income. So now you're an income generating department and you can manage that growth. And so as you continue to produce income, then you can hire individuals to go out and source loans. If you don't go that route, you could designate one individual to be a business development officer, go find loans and start originating loans organically, and use a third party to do all the underwriting and the loan docs and the closing and servicing, and be able to grow that way. Or I think, my tune's changed a little bit lately with credit unions' challenge on liquidity and the advancements in technology of credit union core systems and the available technology to supplement those core systems for commercial deposits. Go out and start create some commercial deposit products and go look for commercial deposits, or go look for small loans that will generate commercial deposits, and grow your commercial deposits harmoniously with your loan portfolio. I think, a challenge that some credit unions have today is you start in lending, you grow your loan portfolio, but you don't have the requisite deposits, and that can create liquidity challenges down the road. So I think that's sort of the perfect scenario. That might require more resources throughout your credit union, and the ability to be able to service those types of deposits in your core systems and have supplemental technology to be competitive. But, there's really kind of three ways: generate loans organically, buy participations, generate income, and then start originating, or, look for opportunities within your existing membership to engage in some small business loans and generate commercial deposit volume at the same time.
All right. Well, thank you. So that gives our audience three options there. So
there's probably more. I mean, there's many ways to do it, but I think the bottom line is if you have a third-party resource that you can rely on, you need a person and an objective, and you can get started.
Awesome. All right. So what challenges are credit unions currently experiencing with business lending?
So the landscape's changed quite a bit over the last couple of years. The trajectory at which rates have changed over the last 18 months has been a significant challenge for credit unions. Not only with the challenges that's created from a standpoint of loan turnover. So, commercial loans generally have shorter terms. So they're 5, 7, 10 years. By regulation, if you're a federal credit union, it can't be more than 15. So they generally rely on the portfolio turning over. So those loans will mature in 5 years or they'll refinance. With loans being locked in, I think this is the case in mortgages as well, but loans being locked in at those low rates, there's not a lot of motivation for those borrowers to move that money. That's created some liquidity challenges within the industry. And the corporate credit unions know that very well. So, the liquidity challenge today is probably the biggest one. Commercial loans by nature, generally, because 97% of credit unions' commercial portfolios are commercial real estate, they're larger. I'd say the average commercial real estate loan is probably $500,000 to $5 million. So that is, in each one of those individual loans, that's a large chunk of liquidity that's required to fund and close that loan. So credit unions are challenged by that as well. Although the counterpoint to that, I think that commercial loans do offer from a structure standpoint, the ability to mitigate a lot of that interest rate risk in the way that they're structured. Many are variable rate. Again, they're short term. So while they're larger, I would argue they are a better deployment of liquidity, but some credit unions have shied away because of the size. So that's been a challenge there. And then on the rate side, there's a lot of loans on commercial portfolios in the credit union space that were done at 3.5%, 4.5%, 5% over the last several years. There's a large swath of loans that will be maturing in the next year or two, this year, next year. And when those loans mature, they'll have to be repriced at today's rates. So loans that just fit the parameters at 3%, 4%, 5% might not fit those same parameters at 7 or 8% or whatever the market rate would be when that loan matures. So that could create some workout challenges for credit unions. There's a new coined term. It used to be a cash out refi. So borrowers would have a piece of real estate, they would refinance it, take cash out of that asset because of the value, and purchase another asset and grow their portfolio that way. Well, there's now a new term of cash in refi. Because of rates, borrowers might have to put more money into the loan and refinance. So I think that's a challenge. And then just overall, the commercial real estate market is experiencing a couple of big challenges today. Number one being office, with the migration to remote, as I'm sitting in a home office, the challenges of office space is going to be big for some credit unions, although credit unions aren't in the downtown Class A office space, the downtown high-rise office space like a lot of banks are. So I think they will be able to dodge a lot of the trouble. I think that's where a lot of the issues will be concentrated, and credit unions don't generally play in that space. So credit unions may dodge some of that, but there will be some reverberating effects with credit union real estate values that are a result of the office challenges because of remote work. So that's out there. I don't see that as being a huge challenge for credit unions, but again, it will have effects on things like cap rates that affect overall real estate value, no matter what sector it's in. So that'll be a challenge. And then I mentioned liquidity, maturing loans, and I think another big challenge that credit unions will be faced with is filling the space that is being vacated by some community banks, where credit unions are now becoming the largest locally owned financial institutions in their local markets. There's a lot of bank consolidation going on, and those banks are moving out of that small business lending space. So the ability to go enter that small business lending space takes more resources. Credit unions are going to be challenged by that. There's a great opportunity there, I think, but there is the challenge of resources for credit unions to be able to fill that space. And I think that's the next big step for credit unions. As I mentioned, the concentration in commercial real estate is really high, but the ability to go out and attract commercial deposits to solve that liquidity challenge that we've talked about. So those are some big things that are hanging out there. I don't think that there's anything that is going to bring mass trouble across the credit union sphere. But the general commercial real estate market is going to experience some challenges with office. And the increasing cost of operating expenses. Everything's more expensive today. The margins on cash flow and commercial real estate are shrinking. Insurance costs are going up. So those are some things that will also be a challenge. So there's always challenges, and that's why we're here to help credit unions navigate those and be able to help them solve those problems that they encounter. But I don't see anything major. But I do think there will be some trouble around a little bit of commercial real estate, a little bit on the maturing loan side with workouts, and credit union liquidity is still continuing to be a struggle.
Okay. Well, let's talk about, rules, regulations, requirements. Are there any rules or requirements on the horizon or current that credit unions that offer business services need to comply with or be aware of?
Absolutely. So the commercial lending space in credit unions is heavily regulated, right? There's the reason that, another reason that we exist is credit unions are limited to the amount of commercial loans that they can have and compared to their total assets or net worth. So there's always a limit to the loans that they can have. They can't infinitely fund loans. And commercial loans generally, there's a few loopholes and exceptions, but generally will not be the dominant asset type in the credit union portfolio. So that's always going to be consumer loans and mortgage loans that will dominate that. So the challenge of resources, right? If you're limited to the amount of loans that you can make, you're always going to be limited to the amount of resources that you can have. That's generally proportionate to the size of the portfolios. So that's always a challenge for credit unions. And, we're always continuing to fight that regulation and be able to, create exceptions and loopholes. And there's programs out there like the SBA program that allows you to not count the guaranteed portion of those loans against that cap. There's participations, there's ways to manage that. We help credit unions manage those caps that way. So those are existing challenges. I think, the big thing coming up that is going to be new, that isn't a historical challenge that credit unions have always had in this space, is the CFPB regulation in 1071. So, credit unions having to collect data that they've never collected before or had to collect before and be held to that requirement. So historically, it's been pretty loose in the data collection that credit unions have to do when they're originating a commercial loan. They don't have to comply with the mortgage requirements or the consumer lending requirements, and it's pretty loose. So that's going to tighten up quite a bit, having to collect certain demographic data and all that. So I think that challenge there is going to be ensuring that credit unions discuss that with their technology vendors. So if they have an LOS, the ability of that LOS to assist them in being compliant. If all their loan originations are run through that technology better have a way to capture that data. If they don't, it's best to learn that now and go look for other resources. So, we're working internally on developing standalone solutions to be able to help credit unions whose technology can't help them be compliant. But that's something that is going to be, rolled out over the next, 2 to 3 years. I think it's held up right now, but I don't think that holdup's going to last much longer. Once I think the Supreme Court solves the constitutionality issue of the CFPB, which I think they will, more than likely say it is constitutional, and then they can roll out 1071. So depending on the size of the portfolio, the credit union and the credit union size, they'll have to implement by 2025, 2026, 2027. So credit unions just need to be ready for that. I would say, number one, evaluate your existing technology and your ability to collect that data based on what you're doing today. If there are gaps, start solving that equation now so that you're ready when it's your credit union's required time to be compliant with that. I think like any new regulation, there'll be a little bit of a grace period, but that grace period generally doesn't last very long, and there's real penalties to not being compliant there. So I think that's something new that is coming out that credit unions haven't historically had to deal with. But on the commercial side, regulation is everything. I think that is what has kept a lot of credit unions from getting into the space, because they don't feel like they understand that regulation, and there's a lot more regulation on the commercial side than other aspects. But again, I think partnering with a third party that are experts in that and can help you navigate that is critical. And it's not that arduous, but it's something that you need to understand or have resources to help understand it for you.
All right. Any additional thoughts you'd like to share with our listeners today?
I think that, as I mentioned, with the regulation, the size of the loans, getting into commercial lending is, it seems a little bit scary maybe to some credit unions, but I think it's a space that credit unions are going to need to fill, that community lending space. I think credit unions today are shifting their focus into becoming better community-based lenders. I think historically we've been really good commercial real estate lenders on the commercial side, but the need for deposits, the need to incorporate the commercial loan products into the branches and the deposit products into branches, that's a good way for credit union growth. I think if credit unions are sitting there without commercial loans on their books today and are wondering how they'll get started or how they will grow, I would challenge them to just look at their existing members and figure out how many of those members are small business owners. I think they'd be very surprised. They are small business owners, but they might not think of the credit union for commercial. They might have their mortgage with them or their savings account. Generally, there's going to be, you'll be very surprised with the number of clients that you potentially already have. And then it's a great space to serve. I think that's credit unions need to be serving in that space. And we've developed products over the last 2 years to really help credit unions get into that space more. And that's been our objective, to help them get into the small business lending space through, like I said, SBA or just the small business loans. And it'll be very important for credit unions to be there and serve those membership, serve their members in that space, because it's being filled today with a lot of fintechs that might not be in the best interest of the borrower. So just like credit unions are focused on helping serve their members on the consumer side and helping keep them away from payday lenders and those predatory lenders, doing the same on the business side will be extremely important.
All right. Justin, thank you so much. Great information. Thank you for taking the time to join me today.
Thank you so much. Have a great afternoon.
All right. So this episode of Financial Minds Meet the Experts is brought to you by Vizzo Financial's blog. Did you know Vizzo Financial has a blog? It's true. Our blog consists of articles written by our experts on staff and partner organizations. We cover the topics all credit unions need to know, including the economy, cybersecurity, payments, leadership, DEI, and so much more. We release new articles weekly, and you can even subscribe to the blog to have them sent straight to your email. Visit the resource page of our website at www.vfccu.org to check out the Vizzo Financial blog today. As always, thanks for listening and make it a great day.